Call the meeting to order at 7:02. Is there a motion for the approval of the July 22nd, 2020 minutes?
So moved.
Thank you, Colleen. Is there a second?
I have a quick edit. Actually, it was like just a ampersand was in there instead of a, or it was missing or something. I think after bullet 6
Okay,
for the ways and means, that was it. But otherwise, so moved.
Thank you. Is there a second?
Second.
Thanks, Mike. All those in favor?
Aye.
Aye.
Approved. Moving on to the Pension Advisory Committee presentation, Mr. Ed Denton from obviously the PAC. And Stephanie, do you have that to share with us? Or does everyone have it?
Well, I have it up if Stephanie gives me ability
I
to
already
share.
did. You can share.
Okay, thanks.
Can everybody see my screen?
Yes.
Okay. Well, thank you for having me at your meeting tonight. I hope you're all doing well, having a nice summer, and despite the pandemic. I was watching the 6 o'clock news before, and I guess things could be worse. We could be in Texas or Louisiana.
yeah.
Oh,
Thankful for that. Okay. Let's see. Okay, so tonight I'm going to focus on the concept of pension deficits being a form of high cost debt. Why that's not necessarily good for the township. Okay, on slide 3 here, I took the quote on slide 3 from a May 2017 essay from the Hoover Institute at Stanford University, and the essay was titled "Hidden Debt, Hidden Deficits: How Pension Promises Are Consuming State and Local Budgets." The quote reads, quote, "What is in fact going on is that governments are borrowing from workers and promising to repay the debt when they retire. The accounting standards allow that the bulk of this debt go unreported due to the assumption of high interest rates." So I'm going to illustrate first. I'm going to illustrate the latter point on the next slide. Okay, the graph on slide 4 has a township's pension deficit since 2003. The blue bars represent the pension deficits assuming an 8% discount rate through 2018 and a 7.75% discount rate in 2019. The red sections of the stack bar is from a sensitivity analysis that's included in the financial statements, which assumes a discount rate 1% lower than the official discount rate. Unfortunately, both these discount rates understate the true size of the township's pension deficit. The table on the bottom of the slide is the Pension Advisory Committee's rough estimate of the pension deficit, assuming a 6% discount rate. As you can see on the right side of the slide, the average deficit over the past 6 years is approximately $8 million, assuming a 6% discount rate. We then estimate the approximate cost of delaying full funding of the pension liability by 1 year is approximately $500,000. Now, we understand that some people might find this concept a little confusing, so in the next couple of slides, we attempt to explain this using 2 simple examples.
Can I ask a quick question before we move on?
Sure.
218 to 219, it went from 10 million to 6.8. How did that happen?
I'm sorry, say that again?
In 2018, deficit at 6% was $10 million,
Okay.
and then it went to 6.8 in 2019. How did that drop so significantly?
Because there was like a 20% return on the portfolio.
Okay, not 6 or 8, 20%.
That's right, and that was obviously, I mean, the market goes up, it goes down, as we can see, as we're all familiar, and that was a particularly good year.
Okay.
Okay, so on slide 5, This is a hypothetical example, very simplified, but basically I'm getting into the cost of debt. Okay, so by delaying the funding of the pension benefits, the township actually incurs higher pension costs. So here's the example. During 2020, employee X, age 55, earns a one-time future pension benefit of $10,000 when she turns 65 in 2030. How much does it cost? The question is, how much does it cost the township to fund this 2020 pension obligation in 2020, and 2025, 2029, and 2030? So here's scenario A. This is funding in 2020. So the future liability is $10,000. The time period is 10 years. The discount rate is 6%. So the present value of that 2030 obligation is $5,584. Now, in this case, that's the theoretical MMO. Scenario B basically assumes we fund it in 2025. That's a 5-year time period. That the cost then goes up to $7,473. That's 34% higher than it would cost us in 2020. Scenario C basically has it funding it in 2029. The present value increases to $9,434. That's a 69% increase in what it would have cost to fund it in 2020. And finally, you can see it's a 79% increase if we fund it in the years too. So the question is why is scenario A the least expensive? The answer is in scenario A, the employee's pension benefit is earned and paid for in 2020, which is how things are intended to work with pensions. Funds are then invested for 10 years and benefit from compound interest returns of approximately 6% per year. All right, here's theoretical example number 2. By delaying, this involves issues regarding a budget trade-off. During 2020, the township cannot afford to pay its pension expense, which is an existing obligation of $5,584, and new capital projects of $5,584. Now, I kept the same amount from the prior slide, the present value, in scenario A, just to keep the math simple. Okay, over here on the, the question is it cheaper for the township to fund the entire capital budget in 2020 and delay paying the pension expense, or to pay the pension expense in 2020 and take out a loan to fund the capital projects? On the left here is the cost, is the calculations of the cost of a low interest loan. There's the principal amount. The interest rate's 2%. So over a 10-year period, here's a total interest, and here's a total cost of the loan, $6,166. So in scenario 1, we actually pay the pension expense fully in 2020, and we take out a loan for the capital. So that basically totals $11,750. Scenario 2 is the rest of the scenarios we're delaying the pension payment. So scenario 2, we pay in 2025, we pay the capital in 2020, and so it is under this scenario, it's 11% more expensive doing that scenario than it would be just paying the pension expense and taking out a loan. Scenario 3, it's paying in 2029. That's 28% more expensive, and in scenario 4, it's 33% more expensive. So the answer to the question is it would be cheaper for the township to pay pension expense in 2020 and to use a low interest loan at 2% to fund the pension project. Now, the Pension Advisory Committee is not advocating that the township borrow money to pay for capital projects. We're just pointing out that it's cheaper to do that than it is to delay the funding of the pension plans. it's up to township management and the board of supervisors to decide how it wants to do it. But certainly, certainly delaying the pension expense is the more costly scenario. Okay. All right, slide 7 is during over the last 4 years, the Ways and Means Pension Subcommittee and the Pension Advisory Committee have researched actions identified by various pension studies that address underfunded state and government pension plans. A list of these studies are included in Appendix A. Below is a list of some of the actions identified in these studies. Now, it's important to note some of these actions do not apply, or may not apply, rather, to Doylestown Township. Given the magnitude of the township's deficit, it is our opinion that no one single action will likely solve the pension funding shortfall. So basically, the township, in our view, has 3 choices. It can reduce the pension expenses, but that would require the board of supervisors to negotiate, would need to evaluate any of these scenarios in future contract negotiations. So for example, they could negotiate to eliminate the drop program, cap the amount of overtime included in the pension calculation, adjust the pension calculation from an average of 3 years to 5 years, et cetera, et cetera. So these are all things that it would be up to the board of supervisors to consider as part of a negotiation. Or what the township could do is reduce operating costs. So either identify cost savings from the existing pension, existing operating budget, and apply that towards a pension deficit, or fund capital spend with debt. And as I mentioned before, the debt cost is less expensive than the pension. Or the township can increase taxes and fees on residents, or some combination of the 3. Again, it's up to township management and the board of supervisors to decide how they want to do it. But from our research, these are the options. Moving on to the next slide.
Can I just stop you there for a second?
Sure.
Reduced pension costs, you had a category freeze the current defined benefit plan.
Yep.
And move to the current employees to a defined contribution plan.
Right.
What would it require for us to do that? Does the supervisors have to approve of it, or is it a contract negotiation?
That's a good question. I would assume both of what you just said. I know my prior employer, Merck & Company, the company did precisely that in.
When did you do that?
Merck did in 2019.
2019 you did that?
Yep.
Okay. My experience with that is I've been doing that, at least the places I've been working with, 10 years ago.
Right.
The same conversation we're having now, we had 10 years ago. That was our solution. So this thing doesn't keep growing and growing and growing, because you never get to it, because just like I showed you on the first slide, it goes from 10 million to 6 million, and it went back to 10 million in March. So we're chasing something that fluctuates, and we're putting hard numbers in there where at least the calculation is, like you said, it goes up 20%, it goes down 5%, it changes all the time. That's what we did years ago, and it got us to where we could manage this thing a lot better. And we probably did that about 10 years ago.
Yeah, I mean, a lot of companies have done that. A lot of the newer startup companies don't have a defined benefit plan. But again, that's something that the township and the board of supervisors would need to evaluate. Do
you have any notes on how many of the townships have defined benefit plans as opposed to defined contribution plans? Are we extraordinary by having benefit plan?
No.
Most townships do have the benefit.
That's our understanding.
Most private employers have contribution, though.
That's my understanding as well.
Okay. All right.
All right. So moving on to the next one. Okay. So Slide 8, this is a guesstimate by the Pension Advisory Committee on what the impact of lowering the discount rate would be on the average Doylestown Township household. I'll be working with Ken Wallace to get a better figure on this, but just order of magnitude. So if we just pick 2 points, if we lower, for example, the discount rate to 6.75%, let's start from the top here, get everyone oriented. Is the current discount rate 7.75%? These figures are also from last year. So the MMO was approximately $1,100,000. If we had lowered the discount rate then, that would have to 6.75%. That would have increased the MMO by $600,000. If we had lowered it to 6%, which is the recommendation of the Pension Advisory Committee and the actuary and the investment counselor, then that would increase the MMO by $1 million. So if we take 600,000, we divide it by approximately 6,000 households in Doylestown Township, the approximate incremental tax burden per household would be about $100 per year. If we lowered it to 6%, it would be $176 per year. Again, these are approximations. It doesn't factor in businesses, et cetera, but it's an order of magnitude estimate. Okay. Slide 9. This is what the Pension Advisory Committee recommends, at least for the 2020 budget and moving forward. This is what we refer to as the discount rate target migration path. So the target is 6%. The PAC recommends that the township gradually lower the discount rate every other year over the next 10 years to the target rate of 6%. We're recommending that they start making material impacts earlier rather than later, so we can start making material impact on the pension deficit. So, for example, we're suggesting that the township lower it by 0.5% in 2021 and another 0.5% in 2023. In addition, the township's recommending that the pension committees recommending that the township consider making additional quote-unquote mortgage payments, i.e. additional payments towards the pension of approximately $160,000 per year. Now, how we came up with that is totally arbitrary. We basically rationalized it. That's a 0.25% reduction, but certainly lowering the discount rate faster than we suggest here, or making larger extra mortgage payments would be even better than what we're suggesting. Okay. Okay, here's the conclusion slide. The benefits of funding the township's pension deficit aggressively include: it would potentially save the township millions of dollars in interest costs over the next 10 years by taking decisive action and lowering it. If we do nothing, it's going to go up $500,000 or more per year in perpetuity until material action is taken. Number 2, it would help maintain the township's favorable bond rating and keep its borrowing costs low. Number 3, it would eventually lead to lower annual MMO payments, i.e. pension payments in the future, because right now we're having to pay catch up for all the sins of the past. And this would reduce the strain on future township budgets. Finally, we believe it would send a positive message to township employees and residents. Any questions?
Thank you for the slide, Ed. It's really well done. I think it helps to understand that we're going to be spending extra money if we don't address it immediately. The one thing I wanted to say was, well, we're talking about lowering the discount rate for the people that are on here that may not, I don't know who's all on here, but that may not understand it or may not know a little bit about the background. If we reduce it to 6%, that means we just stop the bleeding. That doesn't mean we're going to catch up, right?
Well, no, actually, we'd stop the bleeding and we would start catching up.
Okay.
Because that basically what that would do is that would increase the, so basically the MMO calculation includes a lot of different factors. The estimate in terms of the obligations that will have to be paid out in the future. It has demographic data in there, mortality data. It also has in there underfunding of prior years, differences between the actual returns and the assumed returns. And what the calculation does is it takes all those into account. And for example, if under years were underfunded, it will amortize that underfunding over a period of 7 to 10 years, in some situations a little longer than that. So for example, if we were to lower the discount rate to 6% next year, it would probably take at least 10 years in order for the, or 7 to 10 years in order for the pension benefit to be fully funded.
Okay. Okay, and we were discussing at the Board of Supervisors meeting the one time, I think it was not last meeting, but when we were borrowing, there was a discussion among the Board of Supervisors that we would want to repay a $3 million loan that we were taking early.
Okay.
So in your illustration, it would almost seem like it would be a benefit to not pay that off early and to instead pay down some of the pension deficit. Is that what you're thinking?
Yeah, I think that's exactly right. Is I would assume that the interest rate on that is probably.
Today. Are you watching the meeting?
I have to.
Okay.
Sure.
Yeah, I would assume that that interest rate is probably around 2%, and so it's always best to pay off the higher interest rate debt first before the lower interest rate debt.
Ed,
So-
just,
Yeah, Penny.
I'm not who's. Ed,
Yeah,
I'm here.
Is somebody not on mute? We might need somebody to go on mute. I'm hearing talking in the background.
Thank you, Jen. That would be a good idea. I don't know if Stephanie can mute everybody.
Okay, go ahead, Bob.
Well, can't mute everybody. I gotta unmute Bob.
Bob, I'm sorry. I asked Stephanie to mute everybody and you've been muted.
Sorry, let me just unmute everybody.
Okay,
Yeah, go ahead.
all right. So taking a look at the 2019 audit report, the township and the state contributed $1,272,000 into the pension fund together.
Right.
The benefits that were paid to the retirees, the administrative expenses, and the insurance premiums were $1,245,000, which means very little was going in for the current employees, whether they be the police department or the non-uniform people. The only thing that positive went into the fund was the employees' contribution and also any interest or dividends that were made. And we know that can go up and down every year. So we're just contributing basically what we're paying our retirees.
Yeah, that's right. That's why that deficit's not going down, is because we're not putting enough in.
It's like an interest-only mortgage, right? You never get out from under it. That
Correct.
principal never gets paid down because it's going right back out to your costs.
Exactly. Any other questions?
I just want to also, great question or point, Bob, about the financials, out of the financials, but it'll be time again for the credit rating from Moody's. They do, or I don't know if it's Standard & Poor's, like I think it was Moody's, and they'll do a surveillance rating of the township again in the fall. Last year, we didn't really get to discuss it. It was supposed to be on an agenda, I believe, for February or March, but COVID kind of took over there. That was about the only negative point that was in the evaluation, the financial evaluation for the township. So working on that and paying that down over capital projects is seems to make sense, as Colleen and Bob both pointed out. So, Mr. Pension PAC, what's our next step? So when are you presenting this to the board?
I actually, I asked a question. I don't know. I mean, I was thinking that that this might be something that they would want to see as well. So, Jen, what do you think? Do you think the Board of Supervisors might find this presentation helpful?
Or should it be part of a discussion at our budget committee on
Right.
September the 15th?
There
Well,
you go.
my main concern with just having it be part of the budget, you're talking about your budget committee presentation.
Yes.
My concern is that this has some concepts in it that might take a little bit of time, and we always seem to be cutting it short for our budget meetings. We're always against the, against the time restriction. So that's my only concern. But if you think it can fit within the time constraints of our budget,
Well, one of the things that we could do, and I know we've talked about it before, but we haven't really run it down, is that, we fortunately, we have 3 retirees on the committee. And what we could do is we could reach out to, we could basically do as we did tonight, give this presentation, set up a time, outside of the Board of Supervisors meeting, and just, give a little tutorial to each of the members of the Board of Supervisors to see if, they find this helpful, if you think that would be helpful.
if we can get the other members of the Board of Supervisors, I mean, Nancy's here today, so she got to see it. So you would just need to gather the others together, but if you could do that, that would be great.
Yeah, we certainly can do that.
Well, it would have to respect sunshine, which I'm sure
Right,
Steph.
yeah, exactly.
Yeah.
It certainly was.
Understood.
Right.
Well, as long as they don't work more than 2 at a time,
Right.
that would be appropriate. In terms of fitting it into the budget schedule, if you were going to fit it into a budget workshop, we will not start talking about 2021, at least in any solid numerical way, until the first meeting in October. The meeting on September 15th, I think it is,
Yes,
will largely be 2020 and the pile of capital that's being considered for 2021, but the whole budget won't come together for presentation 2020 and 21 until the first meeting in October. So I would strongly suggest that you follow the path that you're thinking about, which is to brief the supervisors separately. I would also want to make sure everyone knows this. We have been paying extra payments for some time.
Right.
So when you say we're doing 1.2 million, our MMO was in the 1 million range, and we've obviously been putting extra in for quite a few years. We did just lower the rate this year, and I think we have to wait another year till we can do it again.
Mhm.
But the intention, in fact, I did it today, was to drop into the slot for 2021 what I understood to be the PAC recommendation, which was about 165,000 more in extra spending, extra payments for 2021. So we have received from the state the MMO requirements at our current discount rate. And I've added the additional amount that we have been putting in, plus I added another amount to take it to the PAC recommendation. What you showed tonight is a little different, so I'm going to have to.
Yeah, no, this is old, so certainly this would need to be refreshed. So basically, Ed, just so I understand, so basically it would have 2 components that you'd have to put into the budget, I think. One would be the impact of lowering the discount rate from 7.75 to 7.25. And in this situation, that's about a $280,000 change, right?
No, it's more like 100, but
Well, it could be. Again, I don't know. I don't know what the refresh is, but that's a half a percent, generally speaking, is about. Sorry, a 0.25%, generally speaking, is about $160,000. So 0.5% would be approximately 320.
All right,
And
well,
that's before the extra mortgage payment.
we'll have to look at that. I mean, because the official rate is still 7 3/4.
Right, but for 2021, again, if the Board of Supervisors were to adopt this, you would need to put that extra amount in the budget. Right?
Well, we've actually put more than that in, is what I'm trying to tell you.
Okay, no, we probably should talk
Yeah.
offline, or we could change emails on this to.
Right.
Or actually, Bob and Joe and Colleen are
Yeah.
on your committee, so certainly they can take a look at it as well.
Yeah, I think Ed was going to put in our last recommendation, from my understanding.
Yeah,
Okay.
the 165, and I think Ed put in the MMO, which has been produced, which we know what it will be in 2021 based on the discount rate change. I mean, there's no changing that for next year's budget.
Okay, that's great.
So I think Ed has that number. We don't have to
Fantastic.
worry about doing that calculation, but he has 165. Our slides had 160. That's almost a nuance.
Yeah, that's
difference
close
at
enough.
this point.
Yep.
I think we should be good.
Well, but the problem or the pressure point always becomes, does this get reduced as we move through the budget?
Yeah.
So that's just something to keep in mind as we move forward. And Ed, thank you for the reminder that maybe the first meeting in October, that also gives Pension Advisory Committee the opportunity maybe to try to set up a couple of meetings. As Jen said, 2 of the supervisors have heard it, although maybe, they'd like to sit in to hear it again, because there's a lot of information. And I know Jen's heard it, but Nancy perhaps has not. So
I think
are we
it
good?
could take a couple tries to absorb it.
Yeah,
Yes.
it's taken me a couple tries.
Yeah.
I'd probably ask a bunch of questions, which I'm not tonight. I'm just taking it all in. So.
Yeah.
All right.
good.
Thank you very much.
You'll need to-
Are we good to move to the next agenda item?
Yeah.
Yes.
I'm going to sign off. Thank you for having me.
Thank you, Ed.
Okay, all right. Thank you very much, Ed, and good night.
Well, we'll see you hopefully next couple weeks.
Brenda, this is Sinclair. Could I just make a comment?
Of course.
Oh, sure. Just going through on page 7 with the potential pension reduction costs or savings, I don't think we've done any calculations or studies yet. That's something that we probably would have to do to see what the individual benefits might be to looking at any reductions.
It's unfortunately the presentation went away. I'm not exactly sure.
That's the chart
That's
which
correct.
lists the possible future options. And I would make the same comment that these are interesting topics, but they all need to be quantified.
Quantified and also discussed. It's early, and certainly if Colleen and Bob have anything else that they want to add on to that, please do so. But
Well, is that the slide that shows different options for what we
Yes.
should be doing?
Yes.
Yeah.
Yeah, I mean, that's our purpose. That's our mission under the PAC, and it's going to take quite some time, I think, for us to get through all of those and work through quantifying and determining whether or not it's an option the Board of Supervisors really has an appetite to discuss. So it's all on the table, but none of it is, let's go move this forward tomorrow. So that's a long-term plan.
Yeah, I would just add to that, Colleen, as I'm not so sure PAC was going to spend a lot of time quantifying those. I think it's kind of our position that it's in the Board of Supervisors, the administration, and the staffs, what they have the stomach for.
Right.
And,
Yeah, that's a good clarification.
then you quantify it after that.
Right.
But it's kind of not our position to say this is what we recommend. We're kind of outlining the options. We're not
Right.
in a position where we can make any decisions. So we're just kind of laying it out there. Here's the problem, here's potential solutions. And now it's kind of up to the board and the administration to advance it.
Why wouldn't the PAC committee be the one to study these?
We have studied them. And in our 13-page recommendation, a lot of those were quantified.
All right. We'll have to find that.
Yeah, but it doesn't make sense for us to do a lot of work if the Board of Supervisors say, we're not going to consider that.
Right.
Yeah, I'm familiar with that.
Yeah.
So it kind of cuts both ways. I mean, if I were a Board of Supervisor person, I would say, well, what do I get for any of these things? That'd be the first question. So I think that we have to do something to at least, what are the top 3 on this list to consider?
Yeah, and I think we think that's the administration's position, is they know how many people get those benefits, and we don't. So it should be a fairly easy exercise for the administration to quantify some of those recommendations and present them to the supervisors.
Well, some are, some aren't.
Yeah, I think we'd have to engage the consultants, and obviously those funds come out of the pension plans to do it. And whether or not, it's both plans or just one plan.
Well, there's a lot of things to, be considered when you start talking about that, which have been laid out. And I think Ed may have brought up a point that it's time to dust off, what was it, Bob, a 13-page?
Yeah, 13-point recommendation, yeah.
Yeah, so we may want to take a
But
look.
I'm sorry, for example, like the drop program, that really is something that the supervisors, the administration need to talk about. How many people are in there? How many people do they think are going to participate in it? It's hard for the PAC committee to not justify, but quantify any of that.
All right. I think we will now move on, but there, at some point, Sinclair, you raised a good point, and nobody on that side really wants to look at the cost savings can be associated with, their pension, but you have to look at the expenditures. The taxpayers may not be happy at a tax increase. It's been suggested that there be a temporary tax just to help supplement the pension, the repayment of the pension. And we've also talked about tonight, or Ed did, that it's cheaper to borrow money for capital rather than kicking the can down the road for the pension. Bob pointed out earlier that even though there was extra payments, as Ed said, last year was really not much of a gain moving forward. And those are the things that need to be looked at. So
Thank you.
enough about pension. If there's no other questions, let's move on to EIT. I guess Ken and Ed, or maybe it's just Ken.
Well, Ed will be joining in too, but to answer your question, I ran a income statement report as of August 25th, and comparative from 2020 to 2019, the EIT is down 5.3%. The local services tax is down 4% year to date versus 2019. So yes, the EIT has picked up with the late July, early August submissions, but it's been running constantly about $120,000 to $125,000 below last year's revenue that we've gotten in for EIT.
The percentage amount is interesting, but what are the hard dollar amounts for those 2 years?
So far, from 1/1 to 8/25, we've received $2,221,393 versus $2,345,871.
And we had budgeted to be 1.5% higher.
Right.
Everything was going at the same rate. So one of the things we've done is to take the year-to-date and compared it to what has up to now been a very stable pattern of how much of the revenue we get in each quarter. And when this 5.5% earlier in the year, when you did the calculation then, looked like we were going to be off maybe 10% for the year. At this point, it's a little hard to say, but we do think we've reduced our pessimism a little bit, and we're now sitting at about 7.5% for the year. But frankly, we just have to keep watching it to see what happens. And Ken, the color commentary is the payments you're getting are you getting any more Q2 payments or?
Oh, they're all over the place. I'm getting Q5, Q2, very little Q1. So like I said, they've been all over the place.
Right.
And the payments are lumpy. Like we got $23,900 yesterday of EIT, whereas around the 1st of August, we got, over $250,000. So it's been quite lumpy, is like Ed likes to say.
But that gets to the point that Brenda made in her email. The $250,000 that we got on August 1st was probably the 7/31 deadline.
I wouldn't be surprised.
Not all of it. Not all of it.
Not all of it, but like I said, I'm still getting Q5, which is technically the Q4 of 2019.
At any rate, we're basically sitting at about 4,085 for the year, 4,010, I guess, is where we think we'll be for this year.
Right.
At
Is
this
that forecast?
as a forecast. So to me, that obviously still needs watching, but the intriguing thing to me is where does it go from there? And we're going to be talking about budgeting stuff later. I can save this comment till that point, but at this point, I'm pretty well convinced that we're going to have to do a multiple scenario version of the budget this year.
Yes.
One in which what we currently think is that it'll continue down a bit next year. Currently, we're sitting at a further 2.5% slide, which, by the way, compares to the 2008 to 2010 period was down 15% by the time we got to year 2. So this is maybe a little less. But then there's also the possibility that it'll flatten, and it's also the possibility there'll be some recovery. So I think we're going to have to build this budget in layers with scenarios. I don't see any other way to do it.
Well, that's, that certainly will be helpful. As I think I said, I listened to Keystone and Berkheimer's presentation last week about the collection. And some municipalities, some areas have had better results apparently than what Doylestown Township has had. So there's not as much of a loss or a reduction year over year. Of course, that still doesn't address what might happen in 2021. So, but thanks. We're down about $120,000 and
Year to date.
Year to date. Okay.
Yes.
All right. So moving right along. Mike, I'm sorry.
One point with that, and you mentioned that it's variable from municipality to municipality. It's really determines what the makeup of who the employers are. And if you have a hospital and you have something, you'd be more stable as opposed to something like New Hope, where it's maybe a lot of restaurants and not a lot of manufacturers. So most of our people that contribute to the EIT are from Doylestown Hospital, like the top 3. I'm asking.
The hospital was in there. Ken or Stephanie, do you remember, Bob, the top 3 employers? I can see the listing in the document, but I
remember
can't.
Doylestown Hospital.
Yeah, school district in there?
The school district's in there.
Yeah, I would think the district.
Yep.
Well, certainly the school district, everybody's still getting paid. So,
Right.
I was hoping that it might actually be a little more positive than what the number is, but there's no need to spend any time on that. I don't think any additional time tonight. We'll obviously keep watching EIT as we move forward. But what about other revenues and expenditures, Ken W. and Eddie?
Well, you've got the report.
Yep.
Based on the first round of interviews with the department heads. That those were interviews that were conducted during July based on the first 6 months of results. And they have ended up with revenue being off on the operating line, something like 700,000, and expenses being on the same line, operations being lower than budget by 285,000. So to some extent, the revenue is being offset by some reductions in spending. EIT, of course, is the big one we're talking about. We've clearly had problems in the parks area, though the downer in revenue in parks, at least in this, as of this report, is something like 125,000, and about half of that has been made up by improvements by expenses we didn't have. So a portion of that has been mitigated.
Ed?
Yes.
So the Parks and Rec, also the golf outing wasn't included in that, right? Because it got bumped this year, so it'll be.
No, the golf outing's here.
Is it? Okay.
And what's in for the golf outing here may be on the 6 month report is probably more pessimistic than it ended up, because among other things, the golf outing results are largely dependent on this year, particularly on the number of golfers. And that ended up being, I think, 108 paid and 104 showed up. So it was much higher than the number that we were thinking about when we did that forecast. So I'm pretty sure there'll be some upside there. We also have, as you know, we've received our state liquid fuels. We've got that in hand. We have not yet received our pension aid, and maybe this is being too pessimistic, but we are still forecasting that the state may decide to cut that back this year. They're running out of time to decide to do that. So that's worth $180,000, in which may come back to us if they don't make a change. We have also forecast real estate transfer tax and down 5%. I mean, all this is listed in that in the report. If you work your way down the page, you can see what all the bits and pieces are. Real estate tax itself is done fine.
If I may add some color.
Please.
As of the 25th, we've received in the general fund $1,485,354 in real estate tax. So that's done quite well this year. The other big mover has been, of course, the building permits. So far, we've received $418,775 in building permits, which is year-to-date comparative to last year, up $225,600. So
you're just looking at the main building permits.
Correct. Just main building permits.
Account, because in the total that we call building permits, et cetera, on the report is at 530 year-to-date as of June. So there's a bunch of other stuff that's in there also. There's
transfer tax year-to-date is running a little bit behind from last year.
Yeah, so we're forecasting transfer tax and LST down on a yearly basis, as you can see from this. as far as I can tell so far, we're in the second round of interviews based on 7 months of results. Not a lot has changed, but as I already said, we've got a little more bullish on earned income tax. But we haven't done all of the interviews yet, so I can't really comment very much on much of anything else that has changed. But otherwise, I think the changes from the June forecast are relatively small.
So state liquid fuels, that was one thing we were worried about because purchases of gas were down. What I'm looking
We
at.
got our notice for next year already. Ken, do you remember? It is down some.
Yeah, we received about $595,000 in 2020, and they're going to send us $537,000 in 21. So that's about 10% reduction in that area. So
And in the letter, they,
Thought it would be.
Yeah.
yeah, it's actually a little bit more than we thought. But, and in the letter, they actually said due to COVID. They
Yeah,
put it right in the letter.
not surprised.
Yeah.
Yeah, but if you see how many months that the driving was down, 2 or 3 months, 10% almost doesn't sound like it's enough.
Right.
mhm.
So anyway, that's a bit on the good news side.
I know from the transportation that I work with the Turnpike, their collections were down 15%. So the fact that you mentioned 10%, I thought that was a good number.
Mm-hmm.
Yeah.
And I was wondering about the transfer tax again. It looks like collections to date are higher. And
Yeah.
I think the real estate market is booming right now.
Mm-hmm.
Well, we're down year to date versus last year because we're down about $65,000.
Real
versus
estate
last year.
transfer tax?
Yes. Yeah, look on the two left-hand columns in the 2000s, in the July 31st report, which 259 at that point, or 260 versus 245, something like that.
Okay, for some reason, I have a June 30th
Yeah, I'm
report.
looking at June 30.
Yeah, mine is too.
Well, just to update you folks, we received $317 in transfer tax this year versus $381,845 last year. So we're down about $65,000. Our July receipts for transfer tax were a little bit on the high side. We received about $70,000 for the July. So it should be interesting where we're going to land as far as August is concerned.
And I agree with having just looked at, anyway, looking really closely at real estate and talking with some people. Market was hot in July. I think there's going to be settlements, so it'd be interesting to see what
Yeah.
happens.
Yeah, Bob, you're right. The report that you have is the June 30th report.
Mhm.
The pattern reverses when
Yeah.
you get a month later. What I was reading you was
Yeah,
the
I just,
numbers as of July. Sorry.
Okay. I have a number of people, relatives who are real estate people, and the market is really booming right now.
Well, if
Yeah,
interest rates continue to be low, I'm sure that the market will be strong. It's just a matter of inventory and
Okay.
there's enough out there.
Well, yeah, a lot of or I shouldn't say a lot. A number of properties I know have sold on the first day. So
Yeah, and I've heard stories where they've gotten more than they were asking.
yes, premiums. So, okay. Anything else, gentlemen? I mean, Ed, you said there wasn't really, not all through the the expenditure side.
I don't think there's anything else to jump on. No.
Okay, all right. So Ken, why don't you talk us through the 2019 audits for the township and the DTMA?
Well, what would you like to know as far as the authority is concerned? Because I have their financial statements with me tonight. Let's start it this way. The the authority is a component unit of the township. And the GFOA's definition of component unit is a independent operation in which the elected officials of the primary government have a financial responsibility. So the authority and the township, from what I understand, has had an agreement between the two since 1993. I believe it's 27 years old. It was just recently updated. But the authority operates their water system, as everybody knows. They use township employees, from the executive director to the water operators, are all township employees. So, you know, the authority reimburses the township on a monthly basis for fringe benefits and rental space as far as the building out back. And, you know, they do have as everybody knows, an independent audit of their you know, financial statements as far as the authority is concerned. And those component unit results end up on the township sides in their financial statements, because that's the proper way to do it under GFOA guidelines. If you did not have that component unit contained within the township financials, the financials would be incomplete.
Okay, so thank you for talking about the component unit. And I think most of the people, or a lot of the people here tonight, that aren't CPAs and may not understand everything about the component unit and the GFOA. But I think I want to know, and other members of the committee, looking at one of the comments you made, maybe we'll start there. Ending comments is everything that's included or in DTMA is reflected within the township's audit.
Yeah, the component units audit goes on the township's financial statements, and the township financial statements contain those component units. I believe the page where it has net position has the component units assets and liabilities and restricted and unrestricted assets.
Yeah, I guess I have two basic questions. It's hard to tell from DTMA's audit because the revenue and their expense appear to be almost identical. Is how much profit goes to the township operating budget? If I look at the township budget, it looks like there's $1 million in revenue and $700,000 in expense under water. The revenue shows as DTMA, and I think the expense shows as water. Is that correct? Yes. So it looks like,
because we have Fund 41, which is the water fund.
okay.
And all those expenses as far as payroll are run through that fund. And what happens is that, you know, they get paid out of Fund 41. The fringe benefits and the rental fees go into the general fund. And I believe that's reflected on the
Revenue
East
side.
and Needs report.
So am I right that the profit is $300,000 to $400,000 a year? Because it's hard to tell from DTMA audit. It looks like the revenue and expense are really pretty close.
Let me, let's see, operating revenue for 2019 was 2.4. Operating expenses, 2.249.
Yeah.
Yeah, net operating income was $166,000. Investment income of 95. So they picked up a total non-operating revenue and expense of 133,000. change in net position was 300,000. Their net position is, went from 17,074 to 17,374.
So none of that,
So-
it doesn't look
Yeah.
like it passes to the township. It's all retained.
I understand all that, the financial piece of it. What is the profit that goes to the township budget?
None.
I wouldn't say there isn't any profit. They're just paying us back for their payroll, their French benefits, and their rental.
They're
How do
reimbursed.
they pay you back for the payroll? Is there a markup associated with that, or is it dollar for dollar?
Dollar for dollar.
Oh,
So
And
it's a
there'd be no
break
profit.
even. So it's a break even operation?
Yeah. Yeah.
Okay.
In fact, Bob, that I've been told by the auditors that, and this is just a, a small tidbit, that there can't be a lot of money in Fund 41. And what will happen is that if they over allocated, payroll and French payroll costs to Fund 41, they'll take that back to reduce that fund's cash balance, because you can't have like $100,000 sitting in Fund 41. It has to be reduced down to, let's say, $25,000.
Oh, I understand that,
But
but you
that's-
could,
Go ahead, Bob.
you could operate the water authority with a profit that provides relief to the taxpayers. But I guess I didn't see that.
Well, hasn't there been comments in the past that we thought that it was was providing profit or revenue to the township?
Well, it shows in the general fund that the money that is transferred in to pay for French benefits is a revenue line item.
Well, but that's just,
It's a
that
reimbursement.
hits to zero, doesn't it?
Yeah, it's just
Yeah,
offset the
that's
cost.
Yeah, I mean,
bookkeeping.
The reimbursement for expenses.
It's reimbursement.
Right.
Right.
It's calculated by adding up the cost.
Is Fund 41 the internal service fund or the enterprise fund?
The
excellent
yeah, that's
question.
the internal. It's the internal fund.
There's two proprietary funds associated with water. One is internal service and one is enterprise. I'm just wondering which one is Fund 41.
Yeah, I don't have the audit in front of me tonight.
That's okay. And then DTMA retains, they have restricted balance, I think, of a little over 2 million.
Yes, and that was the next thing. Last year, they purchased, it shows up on the source and use of funds, or changes in net position, or excuse me, on the cash flows, there was a purchase of investments of $2,672,000. And that flows through, and it sits on the balance sheet.
Right.
But it's called restricted assets. If they're investments, why are they restricted and what's the restriction? Because I did look at the financials, or the notes to the financials.
The restriction is that money is for capital improvements. It's they're building capital improvements, and that's the money that's restricted and intended for the specific use of future capital projects.
So how was that money acquired? Is that through the sale of water or transfers from the general fund or?
Transfers from the general fund. Transfers from the general fund, tap-in fees, but mostly transfer from the general fund.
So the township is supporting DTMA?
Not from the general fund of the township, the general
No.
fund of the authority.
authority, yeah.
Okay.
I guess the piece that looks odd is the DTMA is sitting with $3 million in cash and receivables that are unrestricted. Does that seem odd?
And that's,
They
No,
They
they've
have-
always said that.
I mean, they have 4,600,000 in restricted, and then an additional
they have
$3
$3
million.
Additional is restricted, or is the investment, any labor costs or benefit costs. because they pass that, well, I guess they pass it back on to the township and they reimburse the township.
Well, I mean, Ken or somebody from the township, can you tell us why there's, I mean, $2.4 million in cash at the end of the year? You explained the restrictions, but that's a lot of money sitting over on that, in that component unit.
Yeah, hang on a second. Keith's coming on. I just admitted him. He's coming in. And I know Dick Bach, who's the chair of the DTMA, is on the Zoom call as well. So I have maybe explain that a little bit more for Keith. Keith, if you can unmute and address the question. I know the DTMA has always had a fund balance available to address capital projects and things like that. The Ways and Means is questioning the funds that you have and the purpose and where they came from.
Yes, sorry, my internet connection went down, so I'm switching to a phone, so I might have missed some of the past dialogue. But generally, we have a capital improvement fund and we have an operations fund. We can only utilize certain funds for certain activities within the authority. So we collect tapping fees from developers. Those are only allowed to be used for capital improvement projects. The approximately $2 million in revenue that we collect from our customers are used for operations and maintenance of the upkeep of the authority, of the vital service that we provide to our roughly 3,000 customers within Doylestown Township. So those funds are invested. They are invested mostly in Pliget, and Ken can go into the details of rates and what we get there. But basically, the capital balances are all allocated for future projects, which may include main extensions, new tanks, booster stations, which we are continually doing to upgrade and provide the high quality water that we do. So I'm not sure if that totally answers your question.
Keith, that talks about the restricted. You have $3 million in unrestricted cash and receivables.
Okay, yes.
So in total, your financial statement looks like you have $7 million available.
That's correct.
7.5.
That's correct. It's a little less than $7 million. We're spending roughly about $2 million this year. And our capital improvement plan has allocated about $15 million worth of improvements over the next 10 years. So
But don't you recoup that from the homeowners? You're putting water main extensions here, but you're charging the residents.
Right.
That's correct, but we do not recoup the full investment from the homeowners. We do not. The DTMA will be contributing a portion of that capital contribution to that project. It's not 100% funded by the residents, as would be the case in a developer project where a developer is 100% responsible for extending a water main or building a tank.
So, but going back to the balance sheet, the amount of money that's, I mean, looking at the income statement, there's $2.1 million on water meter sales, and you look down at the operating. I guess what I'm hearing you say is really talk about the capital, the amount that's under restricted assets.
Yes.
Is the $2.4 million sitting in cash? Does that come, you've told us it doesn't come from the tap-in fees. Does that come from new equipment, new infrastructure being installed in residences? Or is that sitting there from operations that we pay for the water?
Right. So roughly the cash received during the year is the revenue that comes into DTMA from our customers. So that is the water rates that are charged basically to our 3,000 customers. Some customers pay more, some pay less, depending if you're a bulk water user. But generally the $2.5 million, somewhere between our revenue, annual revenue is between $2 and $2.4 million is generally where we have been the last 4 or 5 years. And we keep growing every year, trying to always expand our customer base.
Keith, I'll tell you why it seems like a large number to me to have $7 million available. Your total infrastructure value is $8.9 million. So it sounds like you're going to double your size shortly, or you have enough cash to almost do that.
I think our infrastructure, Bob, if you look at page 7, it's closer to around $20 million of infrastructure.
Page 7?
Yes. The statement of net position, non-current assets. We have a lot more infrastructure than $7 million there.
Well, but a lot of it's supposedly, accumulation depreciation is
Correct.
nearly
Yep.
14 million of that.
That's correct. That's correct. That's correct.
So it's 10 versus 7 in cash for those.
Right.
Right.
Yeah, Bob, if what I'm reading you is if you think $7 million is a lot, in about another 4 months, 1.5 of that 7 million will be gone.
Keith, I think 5.5 million's a lot.
Well, I mean, if you know the amount of regulations and the improvements that we are doing to our system constantly, as far as upgrading booster stations.
We just got a grant, right? I just read that you got a new grant.
And we did. We got a
Yeah.
grant. We worked hard. We're trying to, we're trying to save our customers, money. So we spent a lot of time applying for a grant, but yeah, that $5 million will be reduced with an aggressive master plan that we have.
Who gets to keep the earnings on that $5 million? The investment income? Does that stay with the authority?
Yeah, these funds are all within the authority itself.
So the larger the balance, the larger the earnings.
Right.
Mm-hmm.
And I think last year,
Yeah.
there was what, 95,000 or?
95,000 was the
Yeah.
earnings. On that balance.
Which, and Ken can probably correct me. I don't think it'll be anywhere near that.
No,
this
no,
year.
we know it's not going to be.
That's
Yeah,
correct.
sorry.
Yeah.
I'm just curious because I don't think I've ever really asked this question, but is there ever going to be an intention as you grow for DTMA to sort of decouple that labor and the fringe and all the costs associated with that from the township's balance sheet or financials as you grow?
Not the way the, correct me if I'm wrong, but not the way the agreement is written at this point in time with the township and the authority.
Which could be
Because
revised.
it could be,
whatever.
but the way it's been established and the way the Board of Supervisors and the DTMA board as an authority like it to operate, that's how it's been established. I don't think the DTMA wants to decouple at any point.
Did you know the percent of labor that comes from the township and the percent of the labor that is with the authority? Is it a 50-50 split or is it 60-40, something like that?
It's 100.
How much did you get from the township?
I think, and Ken can correct me, we share the expenses, 50% of roughly maybe 3 employees, administrative employees. Does that sound about right, Ken?
Yes, yes,
Yes.
because the water workers are all paid 100%, or reimbursed 100% by the authority.
And they're authority employees.
No, they're not. They're township
They're
employees.
not.
No,
Are there any authority employees?
no.
No.
No. Okay.
No.
All right.
So, I mean, Mike, I don't know if you're going that way, but obviously DTMA is paying for all the same fringes and benefits and everything.
Yeah, I
And I
possibly later on discussion.
Yeah.
Mhm.
And I appreciate the fact that apparently there's no markup or no administrative fee for the township doing all of that work and reporting.
That is correct.
Okay.
No, because they're covering the salaries and the administration side. They're covering 50% of an employee's salary and administration.
Well, I mean, 50%, without knowing what the breakdown of time spent and allocated to, the various
Mhm.
tasks, that may or may not be a good percentage, but, okay. Any other questions from the group?
No, I appreciate all the information too.
I'm sorry, Colleen.
I appreciate all the information as I'm learning how
Sure.
the component works within the township's financials.
Well, one of the things that I'm sorry, Keith, that you have taught us is that there's a lot going on in the current year. So if we take a look at the financial statements at the end of 2020, are we going to see less money sitting in restricted assets? Is that what you're telling us?
They'll be in my street, right outside of my front door.
Yeah, Colleen.
I
can
know.
tell
Come
you,
and drink Colleen's water.
You can come look, take pictures.
Yeah, but he's going to have a receivable for the amount you owe him, Colleen.
Yeah, that's
Yeah, I was
true.
just going to say.
I'll be paying for it.
Yeah.
I can tell you, it's not the amount that it's costing the authority. I can tell you that.
Right.
But no, to answer your question, Brenda, we were ready to go since March to put water main in, but we're being delayed a little bit. So I think 2021 is probably when you'll see the most reduction in that amount of money pertaining specifically to Colleen's project out there on.
Well, is Bucks County Water and Sewer slowing things down? Is that why it's being delayed?
Well, they're just they're hitting a lot of rock out there. So
Who's they?
Bucks County Water and Sewer Authority. So sewer is a lot harder to install than public water. So it's taken them longer than it will take us to put the water in. So we're being a little delayed by them.
Okay. Thanks for the information. Anything else from
Sure.
on this? Okay.
No, I'm good. Thank you.
See ya.
Thanks very much.
Sure.
Oh, just the next couple of items I think are more informational and shouldn't take much time. Stephanie or whoever, what's Ken, Ed, report on what happened on August the 18th. I assume the bank note was approved and all of
Yes.
that, but
Yes, Brenda, the bank note was approved. The advertisements post approval has already been done. And we are moving the information to DCD and obviously to closing in middle of September. And that went well, you know? Yep.
good. Anything from the group regarding that? Okay, I'm seeing head shake. That's good, thanks. And update on the rec center. Dave.
And are you going to go back to the township audit?
Oh, God, I'm sorry. I jumped right over that because I had more interest in the DTMA. Thank you, Mr. Salnick. Would you have, you obviously have a question or something you're thinking about on that. I'm not right now. So go back to the township audit. Thanks.
Actually, I wasn't. I do have I just have one comment. And I asked this of the auditor. If you take a look at the pension fund liabilities, it indicates that the discount rate is 7.75. And the explanation I received was that they also have to show 1% higher, the calculation at 8.75, which makes absolutely no sense to me. Why would, I mean, we're not going to raise the discount rate 1% higher. We already have a discount rate that's too high. So I think Brenda, you're a CPA. I don't know how to address that, but what would be meaningful is 1% lower, not 1% higher in the audit report.
Well, they did have that because they
Yeah.
did have the 1% lower and the 1% higher. Bob, I believe that's just a government-wide GFOA mandated financial statement requirement as
Yeah.
far as to show the range between what is being current and what would it be if they raised it by 1% and if they lowered by 1%.
I think it is a range, and I'd have to go back and check. I wasn't, on August the 13th, I wasn't really, didn't take a lot of notes at that particular meeting. I do remember you raising the question, but Ken, that would be good if you could come up with the GASB or whatever that requires to show the, the sensitivity range that they want to go 2% plus and minus 1.
Sure.
So,
Yep.
And
Not a
you
problem.
believe that that's only for governmental accounting?
I believe that's what it would be for, as far as the government-wide financial.
I don't see that in
Okay.
private.
Yeah.
and
All right.
It would
That's
be
fine.
under-
I just wanted to make the comment. I was surprised that they would show 875.
And I
Right.
remember you saying something about that now, but at
And I-
the time,
And if I may say that they probably showed it in 18 and 17 too. The variance as far as the movement between lowering it and increasing it by 1%.
Yeah, I
Well-
vaguely remember that being there, that they've always shown it as one above, one below.
But I'll find out the GASB
It's
proclamation as
wide.
far as.
there's a pronouncement out there. I'm sure it's
Correct.
GASB, and but it would be good if you could find that.
Sure.
All right, I don't want to belabor that. That's fine. Thank you.
Is there anything else on the audit for the township tonight? Guess not. Okay. Then down to Dave. Where are we with RFPs, RFQs? I think there was some discussion about that at the last meeting, but I didn't tune in, so please update the group on what's going on in the timeline, please.
Can everybody hear me?
Yeah, we can hear you. Speak up.
Yeah, barely.
The Board of Supervisors acted on the approval of the RFP for the architecture, the feasibility study in the architecture portion of the project. MKSC, that is the name of the firm, they were approved to basically do the feasibility study with their sub-consultant, Ballard King. That was approved on the 18th. We are in the process of evaluating, getting our contract documents compiled and put together, and getting, those executed on our end, but we're in the process of doing that now. Generally, they're proposing about a 12-month feasibility / design process, and then approximately a 10 to 12-month construction if it goes forward. Obviously we've got to get through design phase and approval and things like that. So that's where we're at as far as the feasibility and design services for the project. The RFQ for the construction, actually the owner's rep for construction management services, we are still evaluating if and when, as it's been indicated, the board decides to accept or to hire an owner's rep that potentially could go in front of the board in September. But just kicking off the feasibility study and getting that started is key. The owner's rep portion can slide a little bit. So that is where we're at right now as far as the project.
I was having trouble hearing. I don't know if anyone else was as well. The architectural firm, they're out of Allentown. I have heard of them. Any particular reason?
They did a very good presentation. Ed was there, myself, Dave, Karen, two of the board members, and they did an excellent presentation. And they were the most reasonable, responsive respondent.
Respondent, right.
You
I
know,
don't know how much of the whole story. We received 17 responses.
Oh, good.
Yeah.
With 17 responses, which we internally reviewed with a committee of 4 or 5 of us, and got it down to 6. We called 6 in for interview, and of those, there were really 3 that were pretty much washouts and 3 that were not. And these people were definitely impressive, and they were the lowest priced ones.
Who did the presentation, if I may ask?
If for MKSD,
Yes.
Sylvia,
Sylvia Hoffman. Sylvia Hoffman. She's the,
she had one other with her. I don't know.
with
who
Nick,
that was.
yeah. And very impressive.
Did they
Very,
do,
very, as an architect, as a woman architect, very impressive.
are there any projects they've done locally, we could say?
They've done a number up in the Lehigh Valley with the universities and stuff like that, and municipal. They've worked with Telford and South something up in the area. So,
Okay.
so yeah.
More important, I think, is the Ballard King is
Yes.
one of the premier groups that does these feasibility studies for park and recreation buildings. They're located in Colorado, but they're certainly well versed in projects in Pennsylvania. So that's another reason why actually that we asked them to we selected them as well.
I didn't hear the name of the consultant. I'm sorry.
Ballard King.
Ballard
King out of Colorado. They're nationally known in the feasibility studies for park and recreation facilities.
And how many applicants, how many are being interviewed for the RFQ?
We don't have that set up yet.
Okay. When will that be done?
That is still under review, and we haven't made a determination as to when it will be done. Again, getting feasibility study kicked off is the main goal, and obviously then getting the construction management on board is secondary.
So there's no timeline for that.
Nope.
Interesting.
So I guess I misunderstood. So I had a note that would be, you would have applicants in front of the Board of Supervisors in September. You're saying it's going to go out in September then?
No. It's been out.
We've already received them.
We've received 13 proposals for the RFQ or our request or qualification packet for the owner's rep construction management portion of the project.
Okay,
And
thanks,
At this
yeah.
point in time, we have not shortlisted those firms yet, nor scheduled interviews. The tentative schedule was for us to take that recommendation to the Board of Supervisors in the September meeting.
Right.
That hasn't been finalized yet. As
Gotcha.
to, when and who that will be.
Right. Thank you. Yeah, I just misunderstood.
That's okay.
I know our budget committee is on September the 15th. I assume that a Board of Supervisors meeting follows that.
Yes.
Keep us in line and keep that budget meeting short. Okay. And we may not hear anything there may not be anything, Dave, is what I'm hearing from you. It doesn't sound like there'll be action on the owner's rep then that night.
I can't. Again, I'd like to. There's other opinions that we'll see how it goes. Generally, I'd like to get it moving forward, but it's not necessary to drive the feasibility study forward. That's what I want everybody to understand.
No,
Yeah.
okay. Any other questions about these two items?
Thanks for your work on that, Dave.
Well, it was a group effort.
And the group, yeah.
It was a sprint to get that to the 18th in front of the board. So
Yeah.
that was a big group effort, and including Stephanie and Ed and Karen,
Yep.
as well as supervisors. That's were involved.
17 responses are quite a few to wade through. And
Yeah.
Yeah.
And I think you said how many presentations did you have? 5?
6.
6?
Yeah, that's a lot of time that you spent, so I appreciate everyone's work on that.
Thank you.
It took 2 days.
Yeah.
Okay, next up, preparation for the September Board of Supervisors budget meeting. Anything that,
So the fact that that took 2 days out of this busy time frame tells you that I'm probably a little behind.
no.
No,
I thought you were going to ask for a week of vacation from that.
Yeah, I
no,
thought-
2 would be enough. So we are going through the second round of interviews at this point. They're not finished. And I probably won't get to the point where I can add up, at least the first add up, to see where we are until sometime next week. But we're still plowing ahead to make the September Board of Supervisors meeting. As I explained, I think a long time ago in this meeting, the first meeting in September generally focuses on the current year forecast, which there's plenty to talk about this year, and then number 2 on what we have teed up as capital for the new year and beyond. And we are the deadline has not passed yet. It is Friday of this week to receive requests, and some are starting to come in, and then that's another thing that gets put together in the next couple weeks to get the capital organized and reviewable, et cetera, et cetera.
So had there been a lot of capital requests coming in?
No,
Last month, we talked about that, and there really wasn't anything major at that point in time.
no.
Okay. And I guess the other question is, we don't really have a lot to discuss tonight for that, and it's a few weeks away. But when do you think we'll have the information so that we can review it and spend some time on it as individuals? There won't be another committee meeting before the 15th, obviously.
Well, we're generally under the deadline that we have to get a package to the board the Friday before a meeting. So we'll have to have stuff together to go out on the Friday before the 15th, whatever that is.
It's the 11th, 9/11.
11th. Oh, 9/11.
Yeah.
So that would be the outside day, I would guess, when we would have stuff.
Are you, is there anything that we need to know about, Ed, Stephanie, Ken, coming up in the budget? You've alluded to a couple times capital, so I just wanted to ask about that.
Well, we've postponed some stuff from this year,
Yes.
which lumps it over into next year. And if you take my most pessimistic scenario that says EIT goes down further next year, although I think we're going to be fine in weather this year, now we have the stuff deferred from this year plus whatever new is layered on top of it, and the pension obligations and so forth and so on. What does that stack look like? We really have to get to the point where we can add it vertically and see what the size of the problem is. If I'm assuming there will be a problem, but I don't know its
Well,
magnitude.
there's going to be a problem just based on what you just laid out.
Right.
And expenditures will have to be reduced in some manner. And the the low-hanging fruit is not to do everything or contribute as much to the pension. I mean, we've seen that that's been cut before. I just hope that as we move forward that perhaps that's not the same course it's taken for 2021, but I know it's early. It's only late August. Anything else from the committee? Colleen, I see that you unmuted.
Oh, I think I've been unmuted, but I was having a thought earlier about just for capital. I know it probably sounds silly at this point, but were we as a committee going to put forth the CapEx for the bathrooms at Central Park, or are we just tabling that?
No, we're gonna, I was glad to hear Ed indicate that the deadline is on Friday. So I think some of us will be talking about getting that submitted.
Okay. That was just on my mind.
Okay, good
I
point.
thought that was going to go for the Park and Rec.
But I think when we
That's
talked
what-
about it, that's why I looked at my minutes, or Bob's minutes, and I think it was our last meeting or one of the last two, that Parks and Rec had
Right.
not yet come forth with that. So we said, all right, we'll just throw that on the table, because it's just, we always talk about it, but it's never formalized. So somebody has
Well-
to take the step and kind of formalize it.
And if you go back to our February minutes, I think we talked about putting it out there as Ways and Means
Right.
too. So,
I think if it were to come in front of the board, I think I would want the Parks and Rec Committee to weigh in on it as well, seeing as that they've already looked at all the parks and where they thought their priorities were. I would like them to weigh in on it. So if you could present that with Parks and Rec as a recommendation, that would be great. But I know I'm sure we're all going to ask what the Park and Rec Committee and what Karen think of it.
sure. I mean, I think we'll submit it to administration, and then if we need to have a joint committee meeting or, a conversation about it, that'd be great. Parks and Rec meets before September the 15th, I believe, and that's probably the day right after Labor Day. Stephanie, is that correct? Do they have a
The
meeting?
day after Labor Day is the
They meet
8th.
the second Tuesday.
Yeah, that's the
Yeah,
8th.
which would be the 8th, day after Labor Day. So we
Yeah.
might need to have some conversation at that point in time.
Yeah, because I know you and Brenda, if I recall correctly, you and Kathy had been emailing a couple months ago, I think, about the study they were doing, and they were not putting forth any capital at this point. They were trying to wrap their entire evaluation into their comprehensive plan update for the park system.
But
And so, I mean, obviously, if you're gonna, I mean, I agree with Jen. I think that if you're gonna put that CapEx form out there, to share it with them and let them at least know that you're making that, that, or just a simple email saying, to Kathy and to the
Yeah, we
park
can-
board that, this, we understand you're not putting anything forward, but the Ways and Means Committee has talked about it, and, we'd like to put it forward, and if you'd like to comment, weigh in, support, not
Yeah.
whatever, they could do that.
I could email Kathy if you want, Brenda.
no, let's get the CapEx together, and I'll do it as the committee chair. That's fine. One of the things that the Ways and Means has done, and let's not forget that, is we kind of came up with some ways to fund and pay for this as well out of a couple of the funds, the money sitting aside. So
Right.
that gives it a little bit of a different flavor, at least for conversation in front of the Board of Supervisors, rather than it just being an add-on to a capital. So
Right, but wasn't there some question about the funds being restricted for at least,
there's been a lot of conversation about that, but they're not formally restricted. So I think
right, but that's where the pushback might be, is what I'm trying to say.
that can be fine.
Brenda, can I ask a question? Because this is one of the reasons I've joined the meeting. Hasn't this been something that's been where the goalpost has continued to be moved, that it's come up and never brought to the Board of Supervisors as a capital request?
Right.
How many years has that happened? From a history?
Three that I know of.
Free of, okay.
Yeah.
I was gonna say,
I mean, that's a long time, so I
Yeah.
understand they're doing a study, but it's obviously a need in Central Park, obviously, generates probably the most money also from Park and Rec. So Jen, I agree. It's important that they're doing an overall study of all the parks, but I think this is something that the goalpost is continually moved, and it's something that there's a need, especially with the special ability park that we're offering. I'm very concerned about that.
Yeah.
Well, I think you and I have talked about this before, Nancy. That was kind of something that I walked into when I first started as supervisor. I went up to Joe and I said to him, like, why don't we have a bathroom down there? It's a big concern. And like you said, because we're aiming to make it available for all abilities.
Mm-hmm.
You can't have a child with special needs and hike them up the hill,
Right.
use the bathroom. So I think it kind of conflicts with what we're trying to do there. So I agree with you. I think we do need the bathroom. But I also think it's in the purview of Parks and Rec to do it more so than the Ways and Means Committee, although the Ways and Means can say we can look at this fund in order to fund it. So that's
Jen,
why I think
if Parks and Rec doesn't do it, do we wait another full year? Or should somebody take the initiative and do what's right?
Well,
no, I think that it's just to give them the respect of having their say in it, but also that the bathrooms weren't necessarily Parks and Rec before. They were part of the larger plan for Kids Castle, and I think it's actually on Joe Salvati's plan in the future to put it on there. And I think when we started renovating Kids Castle again, initially, so it's been way longer than 3 years, we've been talking about toilets.
Yeah,
There, and I think,
I'll tell you,
8
Jen,
years
when I served on Parks and Rec and we were talking about the amphitheater, we were talking about bathrooms.
yeah.
And for some
yeah.
reason, every year we thought the bathrooms were going to be a CapEx form, and they never made it. And nobody had an explanation.
Yeah.
So somebody has to take the initiative to
Right.
at least get it to the Board of Supervisors to discuss.
It's not like everybody's on the same page, which is what's so funny about it. The whole thing is every group that we've talked about has discussed it, agreed upon it, wants it to happen. So like Bob said, you know.
When I was on Parks and Rec, they were pretty much unanimous for getting the bathrooms done as a high priority.
Yeah.
So I don't know what's changed.
I don't know where it falls
but-
apart.
And there's the second piece of that is I mentioned special abilities, but I was also referencing all the concerts that are offered that are down there. And it's not just, I wouldn't put that all on Kids Castle by any stretch.
Right.
And just because, like I said, that is the one park that brings the most revenue. I just think we need to figure it out, and everybody needs to, that's just my humble opinion. I'd like to see it happen.
And if we can save some money in some other ways, then that would be where I can imagine it would go and be the most useful as far as the residents go. I know being a mom with a small child, like that's always been a big problem for me, and I've really wanted it. So I appreciate the Ways and Means doing it. I just want to make sure it's going through the right avenues first.
Go ahead.
No, I was just going to say, I don't know what the precedent has been in the past with other parks and things and where that funding's come. Stephanie, maybe you can help us educate, because I know Park and Rec would put money in towards Turk when they were putting some of their new playground, and so I don't know of how they can all maybe work together to get to our point. I think when I went to one of the Park and Rec meetings, John Bray had presented like a mobile bathroom that was sort of, you could attach to maybe the clamshell or something like that, or around there. I'm not sure where. I'm not.
Yeah.
One of my first meetings, I can't quite recall where he was going to put it, but somewhere near down in that direction, so people don't have to walk a quarter of a mile up a hill.
Right.
Whether it's in. So.
Yeah, I'd put it forth and take it to the board and see if it can get into the capital budget.
Right.
So one of the other options for funding this, and I brought this up when I used to be the liaison for Parks and Rec, one of the other options that I was thinking about and is doing some fundraising for it. And I know that that's Kids Castle's purview often. And but I think in order to offset some of the costs, we might look into fundraising. Now, I've heard nobody wants to spend money, donate money for bathrooms, but as a person who's had to hike the hill with a kid that was dancing
Yes.
go to the bathroom, I would have happily contributed a good chunk of change towards it.
I think we should
Um,
have a big lemonade stand and show everyone what it means to have no bathroom here. Sell
Right.
lemonade,
Yeah,
and
Or
then feel the effects,
Yeah.
and all of a sudden you have the fun.
yeah.
That's a
I mean,
joke,
I
but
remember being
I-
at Lenape about 8-9 years ago when the renovations to the Kids Castle were proposed. And that was on their list of items. It was the last item and got the biggest applause in the room that night.
Right.
But they've
Yeah, I
certainly done a lot of other things, but that's been on the list. I mean, Joe's done yeoman's work in fundraising since the main committee has kind of dissipated and the initial renovations were completed in 2015. He's kind of seen it continue and done yeoman's work there, but I know that was always kind of on the Kids Castle list. I'm not sure, maybe he's up, he kind of has, I think, a couple projects in mind and wants to kind of finish those, and maybe leave the bathrooms to something else or someone
Yeah,
else.
I think the impression
will.
I got from
I don't
Joe
blame
was
him.
that he,
I don't
the
blame him
impression
at
I
all
got
for
from
that.
Joe was that he did not want to fundraise for the bathrooms while he's trying to
Mhm.
fundraise for other parts of the
Right.
castle. But I don't
Well,
think,
let's just get it out there and then we can start having meetings unless someone else wants to add something. I'm getting conscious of the time.
Thanks.
There's fundraising is great. There's also probably some money in a couple of funds. I'm going to go back to that because I'm an accountant and I see balances.
Cash,
We can
right.
we have that conversation. And I'm sure that there's other needs that the park needs and other people, but I've been on the Ways and Means since its inception and the Ways and Means has never put anything into a budget request ever. So
Right.
it'll be a first, 2020 is a year of unusual things. So we're going to get that together. I've got to pull out the CapEx form, Ed, that you sent me long ago. I may just ask you to send me another one.
I'll resend it tomorrow.
Thank you. You're very kind. Now moving on, if we're okay with doing that, everyone? Good.
Thank you.
New business. I think we might have something we might want to touch on real quickly. Mike?
I have a point. At my work, we're looking at new ways of doing things because 2020, like you said, is unlike any other year. So we're looking for new ways to bring in revenue and some things. One of the things that was very helpful to my company was the PPP loans. And it's very complicated. It changes just about every week. You're getting an update on that. And the update I got for this week mentioned that there was extra money in there and they're finding ways to try to get it to governmental organizations. One of the specific exclusions of that was a municipality. So and I emailed somebody and I said, well, maybe this this discussion that we're going to have today on the municipal authority might come into play. And that's why I asked that question, which was a little weird, is because a lot of the loans and a lot of the money that you get from the SBA or the PPP loans comes through payroll that is originates with the authority. And that's why I asked, is there any payroll associated there? Seeing that there was none, the likelihood of us, being a PPP loan available to the municipal authority is very slight.
Yeah.
But I think one of the things we got to do, we went over a lot of stuff that we've been doing for years, but I think 2020 is a year unlike any other year where a lot of things are changing. The fact that we're doing 3 Zoom meetings in a row is a testament that things are changing. And we maybe have to look for new ways to bring in revenue to the township, just like our governor.
Agreed.
Okay. I think what at least the PPP is probably not going to work because of no payroll.
Yeah.
Well, I understand, and it wasn't for municipalities, but I wasn't sure if the DTMA might be considered to be something that could be covered for payroll. But it's a component unit of Doylestown Township,
Yeah.
which I didn't think of until you started
They're
talking.
probably not. And they have no payroll anyway, so
Yeah.
it's
Yeah.
probably 2 strikes.
Yep. So anyway, but it's, hey, it's trying to think of something outside the box and different. And when I think we all do that when we work on different things. You're in the
Mhm.
private sector, so thank you for,
Yes.
bringing it to everyone's attention. Anything else
Brenda, I have one thing under old business.
Uh-oh, thank you. Did I forget something else?
No. I'm looking to see what the number is, and I'm asking this for the pension committee. When the budget was approved last year and there was an extra payment, there was an argument over what that extra payment was going to be. And we said we would wait until the audit was done to see what the extra or lower amount of fund balance was. Can we get that number? Do you know what I mean? We had projected what the revenue and expense was going to be, and we said we would wait until we had the actual audit revenue and expense before perhaps making a supplemental payment for retirement.
Yeah.
Can we get those numbers?
It was probably last October's projection. It wasn't the original budget
Yeah, it was the October projected
of 2019 and
versus our audit actuals.
actuals, the final
Right.
for 2019 to see if there's more money. Yes, I'd forgotten about that, but you folks on the pension committee,
I'll
obviously,
never forget.
it's great. So
Okay, that was it.
we will follow up on that, maybe start our next Ways and Means if we don't hear or Ed, would you just send that out to us, Ed and Ken, so we would know?
We'll have to see what it was.
Yeah, no, I mean, it doesn't need to be tomorrow like the expense or a CapEx form.
I would not like to go down this rabbit hole at this time. We've got the next 4 weeks of work ahead of us to get the budget together. I really don't want to go off on this unless I absolutely have to.
Well, it's only two numbers. You look at the revenue you projected and the actual.
I'm already a week or two behind getting this together, Bob.
So I'm looking for two numbers.
Thank you. I understand what you're looking for.
What can Ken
And
do?
I'm the one that has to do the looking. So I'll see what we can get done.
Thanks. Anything else for the good of the order?
I'm a new member. Do we have enough time to just mention what the drop program is? Because I keep hearing it, or I've heard of it. But just for a layperson in a couple words, what it is?
In a couple of words.
Yeah,
Stephanie?
that's a whole hour.
Or should we send something out on that too?
It's 8:55, but it's an
If you
excellent.
call tomorrow, I'm happy to explain the drop program. It is a little, it's a little complicated, but I can explain it to you.
You keep hearing about it in the news, and
Yeah.
I saw it
It's a
tonight.
deferred- Yeah, it's a deferred retirement. In essence, an employee can basically, when they meet the minimum requirements, they can choose to go into a drop program, which gives them a specified number of years that they will continue to work for a municipality. But their pension is set at that point in time where they drop. And that money is put into a separate account for them, and with an investment advisor that they can work with on the investment side of that. But they continue to work. But we know exactly how long they will be with the municipality. They can stay shorter, but they can't stay beyond the drop. In our case, it's for the police like 4 years. So they can't stay longer than that.
Thank you.
Generally, Joe, if you look at the
It's
numbers,
general.
the reason it becomes a sort of an option is because it tends to cost the municipality or the pension more. They end up paying out more to that employee, generally, not always. And it's based on life expectancies and all kinds of different things. It's pretty complicated. But I can send you some information on it. We have plenty through PAC. Bob, we probably have a lot of stuff we can send to Joe if he wants to brush up on it.
Actually, you could.
And it's in our ordinance as well. You can always look at our ordinance online.
I think Stephanie explained it pretty well.
Well, it actually is pretty complicated.
Yeah.
And I mean, she did a great job summarizing it, but I wouldn't even mind looking at the information again.
And there's a lot of information on the advantages and disadvantages and the cost associated with drop.
So if PAC members want to share it, particularly with Eric and Joe, and I'd be happy to look at it again. Mike, I don't know if you have it or care. Just send it out to the,
Sure.
that'd be good.
I'll see what I have, and if not, I'll get some
Yeah,
stuff.
thank you,
from it.
Jen. All right. Anything else for the good of the order? Great question to end the meeting on, Joe.
I was trying to,
Always learn. Anything else, guys? Folks, people? All right. Any, do I have a
I
motion to
move
adjourn?
I move to adjourn.
Who's seconding?
I can't or I would.
I'll second.
Okay, it's
Mike,
Joe.
thank you.
I got Mike.
Thank you very much. Take care. We'll see you in September.
Yeah, stay
Thanks,
well.
everyone.
Bye.
Bye-bye.
Bye, everybody.